I know you met earlier on with Treasury Secretary Jack Lew. I know you discussed Greece. Did you discuss anything else? Did you discuss currency wars and possible FX components?
No, we did not. The Secretary wanted to be informed on the progress we're making on Greece, and luckily I could give him a positive message. A lot of work has been done since we reached a political agreement on the third program for Greece. The Greeks have worked very hard pushing through structural reforms on all different fronts. And now we're entering into a debate which is about their debt sustainability.
Secretary Lew, of course, has been urging Europe to provide debt relief to Greece. Mr. Dijsselbloem, are you concerned that if we don't get debt relief and if we don't have a solution for Greece in the next couple of weeks or months, we may look at another summer of uncertainty on Greece, on Brexit and on the EU like we did last year?
No, I'm not worried about that. We're in a completely different situation than we were a year ago. The current Greek government is very constructively working with the European partners to improve the state of the economy, to improve public services and administration in Greece. And they are fully committed to the program, which is a completely different situation from where we were a year ago. And on the basis of that confidence, we're now entering into a discussion about debt relief. If you look at debt sustainability, of course, Greece has a high sovereign debt. We have given them a very long time to deal with that, on average 32 years, and already the interest is very low. But we stand ready and are now discussing to do more.
Are you worried, or is the key concern for a lot of G7 finance chiefs currency wars? I know you had brought them up in Shanghai. You said what Japan was doing at the time was a topic of concern. Will you raise the same concerns this time?
Well, I think there is general agreement that adjusting your currency rate just for the purpose of improving your competitiveness is not going to work. It only has a short-term effect. It will probably provoke the same kind of reaction from other currency areas, and the effect will only be short-lived. So the thing to do if you want to improve competitiveness is to deal with the structural business environment in your countries, make sure that investments go up, make sure that productivity improves. That's the kind of thing you need to do if you have a competitiveness problem, and not try and adjust your currency rate.
Mr. Dijsselbloem, Tom Keene in New York, good morning to you. Thank you for joining us from Japan. If I look at the dance over the new Greece workout, and the IMF's ability to project their plan upon the German people. We've seen Paul de Guar at LSE in Leuven. We've seen Charles Wyplots in Geneva beg for a restructuring exactly as the IMF proposes. What is taking so long? What do you need to get a proper debt workout for the people of Greece?
Well, first of all, you have to realize that at the end of 2012, we already did a major debt operation, basically reducing the debt burden for Greece, annual debt burden, by 40%. And now we're looking ahead. What more needs to be done? We can take different measures, some in the short term, some at the end of the program. We are designing and discussing those now. And hopefully next Tuesday in the next Eurogroup meeting, we'll get that deal that I think Greece needs and deserves.